All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And upon downloading the ebook, you will be put into my email distribution where you'll start to receive my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time. And it's called the Cubicle Weekly Reader. So I give really good insight on the world of investing, finance, economics, etc. And from time to time, I give recommendations. Of course, you should always do your due diligence, but I give recommendations on stock investments and also cryptocurrency investments. And also from time to time, I give book recommendations because I'm an avid reader. So you definitely want to be a part of the Cubicle Weekly readership. So today is let me pull out my pointer here. Today is it's Tuesday. It's Tuesday, December the 27th. It's approximately 10:48 a.m. Eastern Standard Time. So it's the first day the market's been open since the Christmas holiday. And so now this morning, the market did exactly what I like for it to do. So it made a definitive move right out of the gate, right? So when the market opened this morning, it opened at 38.43. So this here is a 5-minute chart. So each candlestick represents 5 minutes of price action. Okay. So when the market opened this morning, and I'm looking over here, right? So when the market opened, it opened at 38.43. In the first 35 minutes, the market was on a downtrend. So to me, that symbol that conveyed that, hey, I need to potentially be going on the put side, right? Because on average, the market moves roughly plus or minus 50 to 60 points per trading session. So considering that the market, the first 35 minutes was on a downtrend and it went from 38.43 down to as low as 38.13, roughly a 30-point move. So that's really it. Again, if you are thinking, if you understand that the market moves on average per trading session plus or minus 50 to 60 points, a 30-point move to the downside, that represents roughly 50% of the average move per trading session for the SPX. For the SPX, okay? So that means what? So it could potentially move another 20 to maybe 30 points. So it makes sense to go on the put side and go below that which you anticipate. So if you're anticipating that it's going to move another 20 or 30 points, then you go below that, right? So because you are anticipating that the market is going to bounce and actually go back up, okay? But potentially, again, this is all about probability and statistics, right? There's no certainty in trading. There's just probabilities in trading, right? And so essentially, so when I saw that 30-point move to the downside, I decided to immediately jump in and put on a vertical put credit spread. And let me just also mention too that I saw the advanced declining indicator beginning to reverse its direction, right? So the advanced declining indicator looks at the number of stocks that are advancing on the New York Stock Exchange minus the number of stocks that are declining, right? So again, the first 35 minutes here, and then the advanced declining indicator began to reverse direction, right? And so as a result, I jumped in and I put on a vertical put credit spread, and I sold the 37.90. And I bought the 37.85, right, for a 65 cents credit. So essentially, just to give you the visual, I was here and here, and so the market was roughly at 38. It was at 38.18. So it was at roughly at 38.18 at this point. And so again, I was anticipating, right, that there's a high probability that the market is probably going to reverse direction, and it did. And so I was able to get out rather quickly. So I got into this trade at 10:14, and I close it out at 10:23, right? So roughly, what's that? 6, 7, 8, 9 minutes. So roughly 9 minutes, and I made it quick, 120 bucks. Now, you might say, well, that's not significant. Well, that's a pretty significant return when you look at the fact that I only put out $1,500 to make, to make 120 bucks. So roughly a 10% return, close to a 10% return in less than 10 minutes. Now, ideally, I like to make between $300 to $500 per day. So I'm going to look to actually get back in the market, get back into another trade this morning or potentially this afternoon, because the market is actually, it's actually moving. The behavior thus far hasn't been very volatile, and so I like what I'm seeing, and so I'm potentially going to go on the call side and maybe put on a vertical call credit spread and take an additional credit, because again, my objective per day is to get between $300 to $500 per day. So I'm not always looking to make a home run, to hit a home run. I like, making base hits, because the base hits actually, they add up over time, and they are a lot less stressful than trying to always hit a home run. So definitely want to keep that in mind. You want to keep it small so that your decisions are not made from a stressful position. You want to be comfortable when you're trading, and you want to be able to make logical decisions based upon your strategy and your experience trading the market. So hopefully that helps. Again, if I do decide to get into another trade, I may record that, let you guys see how that turns out. But if not, good trading, and have a good day, and hope you guys had a great holiday. And probably won't make another video before the New Year, so definitely wishing you guys a prosperous and safe New Year. All right, guys, so I'm back. Yeah, so as I mentioned in the previous video segment, I saw an opportunity to get into a trade, and so that's what I did. So, for the most part, XLK and XLV, which are the sectors that have the largest impact on the S&P 500 or the market itself, they have been in the red the entire day, which creates a headwind for the market itself. Although the market is starting to pump a little bit. We can look at the advanced declining indicator. As we can see here, there's a small pump in this last, what they call the power hour of the market. But nevertheless, so I saw an opportunity to get into a vertical call credit spread. So I sold the 38.60 and I bought the 38.65. So I sold 3 contracts. The position credit is $135. So as you can see here, I made the entire $135. So let me close this out here. Yeah, so the fact that the XLK, which has the largest impact or the largest influence on how the market moves, it's about a 27-28% impact, with the next sector being XLV, which has about a 14 to 15% impact on or influence on the market itself. And the XLV sector is a healthcare sector. Right, so considering that, XLK has been in the red pretty much the entire day. And if we look at the XLK, if we go into it and look at the components that make up the XLK sector itself, so we see that this thing keeps popping up here. So we can see that the 2 heavyweight components that make up the SLK information technology sector are Microsoft and Apple. Right, so those two underlines, or those 2 components of the XLK, again, are in red, right? In spite of the fact that you have some other components in the green, really doesn't have any major impact. So considering that the XLK has been in red, XLV has been in red, that creates a challenge, so that creates a headwind for the market itself. So it just makes sense to go on the call side, right? Because the call side, you know, when you're on the call side, it benefits from the price of the underlying, you know, either trading sideways or actually decreasing in value. So the fact that there's the XLK and XLV are in the red creates a headwind. Probably not a smart idea to be on the put side because the market could actually tumble, you know, within this last hour. They call it the power hour. So it makes more sense to be on the call side. So now early on I got on the put side. So this time I got on the call side. So in spite of the fact that the market is starting to pump slightly, you know, the advanced declining indicator is showing some, you know, some bounce, if you will. I'm certainly confident that the price of SPX won't reach my short strike of 38.60 within the next 30 minutes or so. So we have roughly, so it's 3:22 p.m. Eastern Standard Time. So we have a little bit more than 30 minutes before the market closes. So yeah, so as I mentioned before, I said I would record the you know, the trade if I got into an additional trade before the market closes. So I've done that. And so yeah, so you know, hopefully you guys have had a good trading year. 2022, I'm closing out pretty strongly, you know, so definitely looking forward to 2023. And we're going to be introducing some, you know, some new services for folks to potentially take advantage of if they see, you know, any benefit of actually learning this skill set called trading, whether it be swing trading, day trading, you know, et cetera, et cetera. So again, thanks for watching. Enjoy your day, and hopefully you guys had a prosperous year.